Hey guys, before we start this video, I do want to let you know that there will be some noise in the background, so just a heads up. Hey guys, welcome back to my channel. My name is Peace. And I had some of y'all reach out to me and ask what taxes are like for a loan signing agent. Although we are coming to the end of the tax season, I still wanted to come on here and give you guys as much information as I possibly can as someone who is not a qualified CPA but has simply gone through the process of filing my taxes. Side note, this was the first time I did my taxes on my own. Typically, I give my dad all my paperwork and then he goes off and handles everything for me. But this time around, I knew things would be a little different. So I did go ahead and hire a CPA to help me out because I did not want to make any mistakes. I'm not entirely sure how helpful this video will be because I didn't really do much except keep track of my expenses. My CPA did a majority of the work in terms of actually filing for my taxes. But some information is better than none, and if you guys do want to mention something that I might have skipped over, or if you want to correct me on something that I might have got wrong, please feel free to do so down below in the comment section, because we're all here to learn, grow, and do better. And like I always say, do your own research. So first things first, it's important that you already have a bookkeeping system in place, whether that's Excel, QuickBooks, or Notary Gadget. I heard that's a really good one. It's important that you keep track of how much money you're making from each company, because that amount is what you'll report on the 1040 form. And it's important that that amount is accurate. You guys have already seen my summary dashboard in one of my earlier videos, and that's actually what I use to keep track of my income. Every so often, I'll go in and enter different things like how much I made, who paid me, and my expense type, because some things are tax deductible. But you'd have to consult a CPA to know what's tax deductible, so make sure you're keeping track of everything. And before I go any further, please keep in mind that my tips are primarily for single member LLCs. If you have more than one member, or if you have employees, things do get a little bit more complicated, and I think you're taxed quarterly instead of yearly, and I'm just not qualified enough to speak on that. But what I do know is that as a single member LLC, you are considered a disregarded entity, which means you report your income once a year when you file personally. Even though there is a separation between you and the entity, the IRS disregards that and taxes you all the same. Moving on. Now you're keeping track of your income with your bookkeeping, and it's sitting somewhere in a bank account. Whenever I get paid, I set aside 30% of whatever I make in savings, because in New York, we get taxed local city tax on top of the state and federal tax, and then there's self-employment tax. It's just a whole bunch of taxes, and my CPA handles all the calculations, and rather than trying to figure out what I need to save for each individual category, I just set aside 30%, even if what I do have to pay doesn't amount to that 30%. And most of the time, it won't. Each city and state is a little bit different, so please make sure you look into what your rates are. As of right now, saving that 30% until the end of the year for my taxes is working for me, but it might benefit you to look into paying your estimated taxes quarterly, which is probably what I'm going to end up doing as well. Personally, I don't want to have extra money sitting in the bank if it doesn't need to be. I rather invest my money back into my business and have it working for me, especially with the way inflation is looking. And on top of that, I don't want to have to pay a huge bill at the end of the year, and I don't think you'll be happy with that either, so it's worth looking into. Now, briefly going back to bookkeeping, it's important that you keep track of which companies paid you more than $600, because they will send you a 1099 MISC. So instead of a W-2, you'll get a 1099, and you'll need that when filing. Make sure that if you haven't gotten it by late January or early February, you contact those companies. But keep in mind that they are not required to send you a 1099 if they did not pay you more than $600, which makes it even more necessary for you to stay on top of the income you're making, because whether you get that 1099 or not, the IRS knows how much you're making, and it's important that whatever you report on that Schedule C matches their records. So that's pretty much the gist of it. I kept track of all my income and expenses. I saved 30% of my income just in case anything crazy happens. And I made sure I collected all my 1099 MISC from all the appropriate companies. Everyone's tax situation is a little bit different, so it's important that you meet with a tax specialist, specifically someone who has experience working with self-employed people, to make sure that you are on the right track. I hope this video was helpful to you all. If you like this video, make sure to like this video and subscribe. I'll catch you guys in the next one.